this new phase for the IRS and really bringing crypto into what I'm calling the compliance era to a large degree. And, I believe maybe, going to help address some of this non-compliance rate. But, from your perspective for listeners, what is the 1099 DA actually designed to accomplish for the IRS? And, what structural problems are they attempting to address with this?
I think in my mind, it'll accomplish two things. Some of it, and those two things are both to benefit the IRS and to benefit individual taxpayers. Or I say individual taxpayers, but whether that's an entity that's doing crypto or an actual individual person. The first part of it is a little bit of addressing this data problem. It's going to make the data more easily understandable by making the data structure look very similar to what all of us are probably used to seeing historically when we do traditional financial transactions with a broker. When we buy or sell stock at the end of the year, we get a form, tells us what we bought, how much we paid for it, or what we sold, how much we received for it, tells us the insights into the tax calculation number, capital gain calculation. So you know really what to put on your return or to pass off. You have all the information passed off to your preparer who can then put it on a return. That will achieve two things. So that's what the 1099 DA form is intended to do. In the first year of its implementation, it's going to be missing the cost basis component. So there'll be a struggle there. That more has to do with just allowing the broker, the custodial exchanges, to get everything set up and running. But in the second year that it comes online, so that'll be the 2026 tax year, it'll have all of that information. The goal there, I think, is twofold. One, it's to help with this compliance problem by giving taxpayers who are conducting activity with centralized exchanges the ability to have all the information they need to properly report their taxes. Then it also simultaneously helps the IRS in two ways. One, it allows them to reconcile because they'll get the same form, so they can more easily identify where there's issues or inconsistencies on a tax return, which is good because then they know who to audit or who to maybe send a letter to. As practitioners, there's a variety of letters you might get even before you get into a full-blown audit. But separately, I like that it also tells them who not to audit.